Hey everyone, John Henry here, Slingshot Futures Trading Group. Thanks for joining me in today's video. Before we start, take a second to give the video a like, subscribe to the channel, and make sure to click the notification bell icon so you don't miss our next live stream or next video launch here on YouTube every day. Make sure you start your day off the right way. Don't forget your free morning brief that's waiting for you at ssftg.com/brief. In the top left, you can click on morning brief to jump into that. That's where you'll find all of our major DP levels right up here at the top, as well as a quick technical overview for the major 6 markets that we look at: the NASDAQ, the S&P, you've got gold, crude oil, the euro, as well as Bitcoin. Maybe you're looking to get a full game plan for the day, week, or month. Check out the join button below. Level 1 subs get a brand new members only video every single morning going over the major 6 markets and a game plan for the day. In addition to that, once a week I launch a weekly brief, and of course once a month we have our monthly brief as well. Of course, all members gain access to our private Discord chat server, and if you really want to get into the nitty-gritty, check out the live analysis room for level 2 subs, where you can see my screens in real time during the New York Stock Exchange Open. You can ask questions and interact with the other members, as well as bounce ideas off myself and everyone else. It's a fantastic environment, and I would love to see you in there. All right, and now on to the really fun stuff, the topic for today. Candle by candle psychological analysis, taking a look at the S&P 500 on the 5-minute chart. So first off, this is an RTH time frame, and if you're unfamiliar with how I approach these, an RTH stands for regular trading hours. And the idea behind this is utilizing a bit of previous market concepts and previous market structures and movements, and building a story around what we believe has happened to better hone our skills when it comes to live market conditions. It's a good way to practice and really get in an idea of what we think is going to happen while the markets are actually moving. So starting off with the first 5-minute bar, one of the big things that we want to kick off is this is obviously a gap to the upside. It's a nice outside gap up. Outside gap in the sense of this is all of the previous day's range, and it gapped up outside of that. So that's a very bullish indication. That's a strong move potential that buyers will be trying to get a bit more momentum. Now, realistically, when we have this big of a gap to the upside, one consideration is, are we gapping into resistance? So if we go backward, there isn't any. There's no resistance, and that's because that would be gapping into all-time highs. So being that it's gapping into all-time highs, well, obviously, there's not a whole lot we can utilize in terms of support and resistance, well, at least resistance. And when we're gapping into all-time highs, the first thing that immediately comes to mind is, I should take profit. There's a lot of buyers who are going to be coming into the market who are thinking, hey, we're at all-time highs. I know I need to take profit into strength. Well, what better way than a massive outside gap up into, well, profit taking? Makes a lot of sense. So we start off and we get this really nice big bear bar to kick things off. And if we look at the overall movement from a volume perspective, we can see where the largest amount of volume took place. Let me put that in front of everything else. The largest amount of volume took place right there at 83.25, but there was a nice little secondary bump there at the 84s. So this 83.25 area is going to be a zone of interest. It's proven itself as the first 5-minute volume node and something that we're going to want to pay attention to. That said, big outside gap to the upside, strong bear bar, heavy volume, and we're closing underneath that volume. That's a big clue. Sellers will likely be looking for a bit more continuation to the downside to see if they can get this to maybe fill in the gap or at least make an attempt at it. We go into the secondary candle to the down, and it's not the nicest looking candle in the world. That could have been a lot better. It's kind of a gross wick on the bottom. It did close below the previous candle, so I mean, I guess it's got that going for it. It could have been a heck of a lot better. It's a really weak bear bar, and given the context, we're gapping into all-time highs. Maybe, you can kind of already see the problems here with sellers, at least. Buyers might be looking at this thinking, well, hey, maybe this is just a pullback, and now we're going to go screaming back to the upside again. So sellers start to get a little bit nervous. It's still closing underneath the previous candle's low, so we have some good strength. The overall volume was at 83.25. It hasn't even had a chance to try to even break above that. So we know that the sellers still have context. It might not be the strongest thing in the world because of the second candle, but they've got context. We go into the next candle with a doji, and it's an inside bar doji, meaning that the entirety of that candle happened inside the previous. Inside bars can mean one of two things. There's some indecision here, which the doji would also imply, or an inside bar doji could just be pent-up energy. It's the market building up and constricting before a blow-off. So really got to pay attention to what happens next. It's an inside bar. It doesn't really give us a whole lot of proof. Volume has been dropping the whole time, and this is the lowest volume on an inside bar doji. Certainly not a whole lot of information that we can derive from that. So if anything, if sellers are going to be coming in, it's more likely that they're going to be utilizing this volume above as defense. They know that there's volume there. What better place to sell again, knowing that you've got an army behind you? And if you fail, it's likely that it's going to come back and bounce off anyway to give you a chance to get out at break even. Either way, sellers don't want to sell way the heck down here because there's no follow through. They're going to want to sell further up to get a better price and also to reduce the risk. From a bull's perspective, buyers will be looking to buy, but they don't want to be buying way up here. We're still at all-time highs. We haven't even gotten to the previous day yet. So there's not going to be a whole lot of interest until it starts dipping a little bit lower, where at least it's been before. We've got some structure to work with. Oh, beautiful bull bar right up to, guess where, 38.83 to the tick. Right off of that big first 5-minute volume node, and the sellers who did sell there were, well, they defended, right? They defended pretty well. And not only that, but this is also a false break above a high. We have an inside bar that attempted to break out and failed. That's usually a clue that we're probably going to see a counteractive move in the other way. Attempted breakout up failed, it'll probably break down. That doesn't mean that it's going to go flying through the floor and it's just going to be a javelin, but it does mean that at the very least it's going to try to get back down to these lows with obvious downside objectives of filling in the gap down here. So bears will be utilizing this really weak bull bar if they haven't already sold somewhere into that retest at 83.25. They'll be selling the close of this, knowing that the risk is still relatively small compared to the potential reward of a gap fill. The risk reward still fits. The probability is still okay. We're staying underneath volume. The bear bars are still holding, and the bulls, they're not getting anything done. Very nice bear bar, and another, it's almost perfectly matched bear bar to the bull bar, almost equal in size. Big difference here, though, is that this bear bar is very heavy. It's closing on its lows, whereas this bull bar closed off of its highs. That would show weakness. This would imply weakness from the bulls, which would transition into strength to the bears. So the bears are obviously trying to get this to potentially break down. We have a micro triple bottom, and we're still looking at this as a bullish attempted breakout into volume, which failed. So sellers will be looking for a continuation down, maybe a small little, again, a little two-legged move down to a new low just to finish off things. And it gets a big blow off through the bottom. Big giant bear bar. We see a lot of volume coming up, and with this volume stepping up to the plate here, that would imply that we have volume getting taken out as typically limit buyers. While the market's going down and volume is going up, that usually means buy orders are getting filled. Buyers buy into weakness and sell into strength. So with that in mind, this big move down incurring a lot of volume, that would make sense to see sellers who are pushing this market down and taking profit into a new low. And we can move in a little bit further and see, what does this volume look like? What kind of things are we seeing? Obviously, there's a lot of volume at the highs that began to be a trap, but we're also getting a lot of volume right here, and that again would imply that although this looks really, really strong, remember, we've got that little measured move, and the buyers are bouncing right off of that area. Big volume stepping up, and we're hitting a major level with all the volume stacking where you'd expect it to stack. chances are buyers are going to be buying into this with the assumption that it will be more likely a range and at least able to get back up towards the bottom of that bear bar to fill in some of this weak volume in here. We get a kind of a bad follow through. It's a weak bull bar, doesn't really prove a whole lot, kind of fell flat on its face. To be fair, there was very little volume. So not really anybody did a whole lot of anything. It did make a new low, but I mean, looking at the volume being so light, even if we look at the candle in and of itself, we can see the majority of the volume is still in the same spot. Nothing's really changed. So this doesn't add anything to the story. We do have potentially a little bit of candle gapping to the downside, which would imply that bears have a bit of strength if they can turn lower. If the bears are going to turn lower, you expect that to be a 1-to-1 move, which would put downside objectives towards right around 38, 70, 75. So it depends on what happens here, but right now sellers are looking like they're gaining a bit of strength. And, well, we've already seen the buyers fail massively up here. What's not to expect the buyers failing again? And what better spot than retesting where the bears already took over? We get a nice weak bull pop that does fill in some of this candle gapping. So the initial candle gap would have been here, but this does modify the candle gap a little bit smaller to about there. It's still an open gap. So as far as an open gap objective, that puts objectives at least back down towards the lows. But we do still have the initial gap, which is still a bit further down. Either way, sellers are looking for a bit more continuation. And once again, we see a big wick on the top and volume increasing or at least staying a bit balanced on the previous. So we put in a base and the market tried going higher, but it just, again, it fell flat on its face. Let's take a look at volume. What happened here? So if you look at the volume, we can see the majority of that volume took place right at the high of that previous bull bar. Sellers, obviously, given the fact that the market closed underneath that volume node, have pushed back a little bit. We're seeing more weakness stepping up to the plate, and unsurprisingly, the bulls are losing their grip again. We get another slide back down. Now we hit both of the gap objectives, the modified and the initial, and we see some big bouncing off of that. If we utilize the overall volume profile, we can see the majority of the volume, unsurprisingly, took place at the modified one, but there was a nice little blow off, and we can't ignore the fact of how well it bounced off of there. I certainly am not going to ignore that myself. So obviously there was a lot of profit taking on this move down, and we can tell because volume increased in a big bear bar. Okay, we've got some profit taking. There are a few things that are starting to change a little bit here, though. We're starting to see buyers taking profit ahead of the lows. Remember that volume node was ahead of it, whereas before it was trying to break down. Now we're seeing it narrow in a little bit. This might be the third press in a wedge, right? This might be the base of a wedge. So buyers will be starting to get a bit nervous here, or I'm sorry, sellers will be starting to get a bit nervous here because we're coming into the moving average. The gap fill is not too far away, and we're already seeing a whole lot of buying going on every time the market goes down. It's still closing underneath the volume, right? So if we look at that overall move and we measure up that bull bar's volume, even if we go back a little ways, all of that volume is up here. So the market's still closing underneath that. That's a really good sign. And if we include that bear bar, we can see that it's even closing below that. There's still clues of bearishness. There's no reason to disbelieve them yet, but it's starting to get a little bit nerve-wracking. We're hitting some big objectives down here. Now, another thing that does also stand out relatively notably is the potential of a channel inside of here. Now, I'm not really a big fan of drawing a channel off of the candle's high when it's not really a swing. What I mean by that is a swing needs to have a move up and then a move down. This just started off because of the gap with a move down. So I don't really know where the swing is if I'm looking at the RTH side of things. So the first really actually confirmed swing would be this one right here. Using that swing and drawing to the next swing, we've got the potential for a channel. Now, along with a channel, there is also a nice confirmed swing low. This is a proven low. The market fell down to it, then went up. So we can use this low, and this may give us a potential wedge base. So we're creating a bit of a wedge formation while the market's going into the moving average. That's typically a sign of bullishness. But again, we haven't disproven the bears yet. They're still pushing, probably trying to get that gap fill. Big, whoa, big heavy bear bar to the downside. Now, the job isn't finished. They never finished the job. We got down really, really close, but they haven't actually made it to the gap fill. Now, notice where the volume is. We're seeing a huge amount of volume stepping up ahead of the gap fill. Well, wait a minute. I thought everybody was waiting for the gap fill, but where's that volume coming in? It's coming in just ahead of the previous RTH high of day. So it seems like a lot of traders are starting to think that there's a bottom that's going to be hovering around this EMA. We're also seeing volume increasing. It is a little bit lower than the previous, so volume decreased a little bit while the market's falling. That could be a nice sign of bearishness. So sellers may be looking to get that breakdown, but the problem is really the downside objective is a gap fill. Who's going to want to sell one tick below this candle, right? If you're looking at a breakout move, below this candle would be 38.25. When the gap fill is there at 67.75, why waste the time? So not a lot of traders are really going to want to sell down at the lows. If anything, maybe trying to sell a backfill, sell something back here where the wedge still has a bit of something to help at least. Selling down here, though, there's just not a whole lot of room. Oh, man, that's nasty. And here we see the problem with it. That's a really nice bull bar back up where we're bouncing off of a double bottom. The job is still unfinished down here. And now what are we seeing? A big kick in volume. Well, not a big kick in volume, but it did go higher. We're seeing volume increasing. And this is after the market closed outside of a low and churned right back up again. That's a potential for a twin reversal. It's also off the moving average. It's also off of the front run of the previous high. We see all of that volume coming in where at the bottom, remember, all down here. Right there. Where's the market closing compared to the most recent volume? Let's encompass the next candle. It's still closing above that. So we can see the sellers are no longer in control. They're losing their grip. That doesn't mean that this is going to be all of a sudden a V bottom and it goes flying up into orbit. But it does mean that sellers have got some problems. They still have the likelihood of trying to get the next leg down, but this is a possible 3 press low that just had an overshoot on the bottom, failing to fill the gap and closing a strong bull bar back up. If it does go back down, you better believe it's going to be laced with buyers because not many people are going to think there's a whole lot of time left before this thing goes screaming back up again. So this is starting to transition to be a pretty bullish indication. A lot of things are starting to shift gears here. Oh man, and that helps a lot. We kick into the next bull bar, and not only is it a really strong bull bar, it's not just a strong bull bar, but it's a really strong bull bar on lower volume. That's a great indication because if we have rising prices, but volume is decreasing, that means nobody's selling. Nobody's standing in the way of these buyers. Nobody's saying, hey, wait a minute, stop. Right? This is an area that we're going to sell back into. Nobody's stepping up to the plate. That's a very good inclination for the buyers to continue buying, and buyers will keep buying off of that. And remember, a lot of sellers will have taken the short trying to get the gap filled. They're still stuck. So the sellers who are stuck here, if they can get a pullback, guess what? Just like we were talking about before, if it does dip, it's going to be dominated with buyers, both sellers getting out at break even and buyers trying to jump back in. Oh man, and a really strong third candle. Now we've got bullish candle gapping to the upside from there to there. That would give us a likely objective of a little bit further up at 38.81. That would be the candle gap objective for now. And we're also seeing the same thing. Really in massive bull bars. These things are closing right on their top. No volume. Nobody is standing in the way of these bulls. Not a soul wants to step up to them. And that's likely because a lot of the sellers who are trying to get this move to go down and fill, they're jumping ship on this move up. A lot of traders weren't expecting this. This is kind of an unhinged move. The probability was still on the sellers to make the low. We know that the sellers lost a lot of their probability, and there's probably going to be buyers at the bottom, sure, but it still had downward pressure. That just got chucked into the wind. That's gone. Now the bulls have really strong bull bars back to back to back to back. We have 3 of them, and we have candle gapping with an expectation of further movement up. Everything is saying that the bulls should keep going. We get more continuation, more movement to the upside, more candles closing above the previous candle's highs, and guess what? More candle gapping. So not only is the first objective ahead of us just a little bit, we also have another one. So now we can extend this a little bit further. You can't actually see it. It's on top of that 83.25. What an opportune place for that to land. So we've got a big candle gap zone or an objective that's landing right on top of that massive volume from before. The candles are getting a little bit smaller. We're seeing them narrow in a little bit, and obviously this would be a micro cycle if you were to zoom into a very fast time frame. We've got a nice little micro channel working its way up, and buyers are staying inside of it. If we look at the overall volume on this leg to the upside, then we can see that the volume, although it's still very heavy, the market is doing what? It's staying above it. So we're closing above the volume. We have bullish gapping. Everything is suggesting that the market should continue further up. More continuation up. What a shock. Big wick on the bottom. We have more continuation to the upside, although there is no candle gapping. There's no new candle gapping. You can see this wick is actually below it. That would be a negative gap. So that's not to say that the bulls have lost everything, but they are running out of steam. We're seeing strong bull bars. We're seeing them closing on their highs. They're starting to kind of fall out of this channel a little bit. So you can see that steam is, it's running out a little bit. You got to throw some coal in the fire here and get this thing going again because it's running out. Volume isn't increasing, so we're not seeing any sign of potential major, pivot points or anything. Let's look at the volume profile here. Still staying above it. Everything is still looking good. We'll probably go up to that 83.25, but we're starting to see some issues here. Nice bullish continuation. Very nice bull bar to the upside. Starting to see volume increasing ever so slightly down at the bottom there. If we look over to the next candle, let's see what happened in terms of volume. Well, there's a little bit of volume. Even if the POC shifted up, it's still trading above, but we are seeing a bit of a volume bump right ahead of our zone of resistance. And that's right where the market closed. We're getting back to that major zone of resistance in terms of volume on the first 5. And if we look at the overall movement, we still do not have any candle gapping. And we're completing a lot of these candle gap objectives. This one's long gone, and we're almost up to the next one, while still seeing that weakness showing up on the highs. We're running out of time. The bulls got to finish the job here, or, well, we're going to run into some issues. Okay, they got it, right? What, to the tick again. They got it to the tick again. Little bit of decaying volume, kind of fell off the highs a little bit. Let's see what happened in terms of the profile up here. Oh, now that's a problem. That's a real problem. So we're seeing a big pivot in volume. All of the sudden now going in towards lunchtime, right? This is going into 11 o'clock. We've got this gigantic chunk of volume. And where is it showing up? Right ahead of the 5-minute volume node that we've already seen has been a massive level of resistance. These are still really strong bull bars. We're seeing back to back bull bars. We also have potential, although small, candle gapping. So they're trying to get something going to the upside, but this volume shift to the upside and these really weak bull bars, that's starting to become a little bit of a concern here. That's making it tough. And now there's the pullback. Another test of the big high. If we include the volume over here, yep, we can see there's just more selling right back at the exact same spot. Massive increase in volume, big kickback going into 11 o'clock with a big bear bar. That definitely makes sense. The one thing to consider here going into the lunchtime session, lunchtime typically just kind of drifts. And since we're drifting and it looks like it's going to want to drift down, it'll probably drift down towards the moving average and continue back up. But this is also going into lunchtime, meaning that a lot of traders are going to be done for the day. And this fills a lot of objectives. We hit the objective of the candle gap, the major one. We hit the volume node. We got everybody exiting on the move up. And although this is a really strong leg higher, when you fill objectives like that, there might not necessarily be all of those buyers waiting on that next pullback. So let's see what happened the rest of the day here. All right, so they did pull back to the moving average, but failed the next high. Yep. Then a higher low, and then ended up breaking to the high before failing all the way back down again. So really, really interesting day of price action that we can utilize and really learn from what happened here. It's all about the narrative. That story around that open volume was everything. And that really gave the clue in terms of what to expect. And when the sellers completely fell on their face down here, that was the pivot, and the market rotated back up going into the lunchtime session. All right, well, that's going to do it for this one. This is something that is always kind of fun and entertaining to do, and I know you guys love watching them, but this is something that I would also highly encourage people to do in your own trading. Really go back through some of your charts, see where your setups are, go candle by candle, and see if it makes sense, because you learn a lot going through it like this. Hopefully you found it useful, interesting, entertaining, and as always, like we always say, stay safe out there, keep those stops in play, and let the winners run. Until the next one, we'll see y'all then. Thanks.